Welcome back. Mining production has increased by 0.7% year-on-year in April, with the largest positive contributors being PGMs and chrome ore. And joining me now to dig into the print in greater detail and its implications for the sector is economist at RMB, Siobhan Redford. Thank you so much for your time, Siobhan. 0.7% expansion on a yearly basis, month on month, a growth of 0.8%. Really the word that pops out of my mind is lackluster. Is this the situation?
Absolutely. It's a very good word, particularly in the context of the mining sector. You know, unlike manufacturing, while it has probably benefited from the improved electricity supply,
Yes.
this is a sector that also relies a lot on external demand and our ports, and so is still facing quite a few challenges, I think, both in terms of global demand and also then, the logistics sector making it a little bit more difficult than it needs to be to get our stuff out of the country.
What was interesting for me is that the biggest contributor here were the PGM miners, and this is in a time when we are in a heavy price downturn on that front, and those miners have also been retrenching. Do they just have no choice but to produce at this point?
It is a challenging period for pretty much all the commodities, and we do see that demand is actually quite weak. I think what probably has helped them is the fact that even though it is weak, it has stabilized a little bit.
Okay.
And so we don't see this constant going down. It's actually now kind of a stability in demand. The price still is not the greatest, which is why they're talking about retrenchments. But it's at least not plummeting further down. Because if we were hearing about the price going further down, then you would be hearing about even more retrenchments. So, it's kind of some stability in the sector that I think is helping drive that a bit.
On the other side of the coin, you have manganese ore, iron ore, and coal being the negative contributors here. Is that solely Transnet issues at this point? And actually, because looking at iron ore, the pricing has actually been favorable. So it's just that they just cannot get the stuff out of the country at this point, no matter how favorable the pricing is.
Yeah, I mean, all of these metals and minerals really rely on use of freight rail as the most efficient way of getting stuff from where it is extracted. So that we know is already a bit of a problem. And then when you are moving to roads, then it's getting it through the ports. And we do know that, the ports have had quite a bit of congestion. It has improved since last year. But, we also are going into the winter time, which does see your seas being quite a bit rougher. And that is already starting to impact our ports. So, logistics just, almost from the beginning to the end, really making it quite challenging. It is worth bearing in mind it's not just our own logistics sector, although, that's doing most of it. But the global supply chain has also been facing quite a few challenges recently with unrest around the Red Sea, which has affected movement through the Suez Canal and availability of containers. So you are seeing kind of a broader logistics issue around the world.
Siobhan, just talking about our own logistics challenges, is there no light at the end of the tunnel, at least in the short term? Because we've been talking about these reforms and the participation of the private sector and the change of leadership, or is it just something that is just going to take a while to actually filter through to the system?
I mean, but that's exactly it. The thing is that the downturn has been a slow grind. It's through a lack of maintenance, increasing unrest and such like. So, that's been a slow grind. And so the kind of repair, the recovery, the turnaround is going to take time. We are seeing kind of improvements. We did have had updates from Transnet in terms of their kind of turnaround plan and how they're doing it. They are moving into the next phase. We are seeing progress with the president having recently signed the national, the economic regulation of land transport, I think, bill. So there is progress where it is going to fix, but it's not going to happen overnight, unfortunately. These are things that require agreements. They require money, which means they need that, kind of agreement with private sector. So it's going to take some time, but, there is at least a plan, which does mean the turnaround time, if you say you had to compare it to our electricity sector, is going to be relatively faster. But for now, it's going to feel like it's going at a glacial speed.
Yeah. Well, gold miners actually didn't seem to feature anywhere in terms of the largest positive or negative contributors. But when I look down the data that we got today, it did feature in the mineral sales part of it, where it was actually the biggest positive contributor. Is that just signaling the upward cycle that gold has been in at this point?
Yes. So, I mean, as you say, when you think about it, when we talk about the production, that's the volume. When you talk about the sales, that's almost like your price times your kind of volume sold. And really what's driving that there is the price. The price of gold has been doing very, very well. It is reaching quite new highs. And so that's kind of driving the sales, why they're looking so healthy. As to how far that has to go, we can always say we think this is the end, but that often is where you get it very wrong. But definitely a lot of kind of move towards safe haven assets, which is helping that. And since we still have quite a lot of volatility locally and globally in terms of geopolitics, the currency probably will continue to have a relatively strong price for a long time, for a while to go.
Yeah. Well, Siobhan, as we wrap up the conversation, mining was one of the industries that contributed to the 0.1% contraction in GDP in the first quarter. At this point with these numbers, is it just an expectation that the mining sector is going to continue being a drag on economic growth?
Well, so April's production is below average monthly production for the first quarter of the year. It's about 0.6% lower than we saw in the first quarter. So right now it is dragging economic activity down. We do think that there is a possibility for it to kind of improve from here, particularly given that we continue to see a lack of load shedding. I mean, here we are basically at the middle of the third month, the third month of the quarter, and we haven't had load shedding at all during the quarter. And that's going to be very positive for your mining operations. Obviously, then just really what it comes down to is what's happening with global demand. And that global economic activity is going to matter to a great extent, as well as what's happening with our ports remains critical. So, it's going to be a bumpy ride for the sector, but there is definitely space for it to improve.
All right. Well, thank you so much for your time and giving us insight on those mining production numbers that we've got for April. Siobhan, that was economist at RMB, Siobhan Redford.